Welcome back to the Trading Desk. I'm Matt Davio here with Nicole Mintines, and this is the fireworks edition of the Summer Trading Desk here. And Nicole, why don't you give us a little preview of what we're going to be talking about on this week's show at the Trading Desk?
Well, this week we're going to talk about what futures are. I know most people, they might be kind of scared off by the fact of, well, what is a futures contract and how do I really get involved, or even just in trading in general. So we're going to go back and talk about the history of how it initially kind of started, or where it started showing up in history, and how it's been evolved through the years, and how what's going on in the markets today.
Good. Trading. I mean, again, a lot of brokers will tell people, don't get into futures, don't get into commodities. They're really scary. But we'll talk about why that's not necessarily true if this is something you want to talk to. And in trading, you said, as you know, how do I trade? This is probably the next topic we're going to touch on.
Exactly. We're going to go into your money and kind of talk about how people might already be trading and they don't realize that, either whether that be a 401k or if they're just basically out there, you know, playing with some markets online, possibly, or wherever it may be.
Right.
And then we're going to go into an interview with Carly Garner,
and
she's going to talk about her recent book that she just put out in regards to how to buy and sell commodities.
How to trade commodities.
How to trade.
Yeah.
And she's going to help demystify some of this stuff as well.
That's awesome.
And then we're going to end with some local topics in regards to local restaurants and kind of the volatility in the market here, and also the local music scene.
Awesome. So we're back to the Trading Desk, but before we do that, we're gonna take you to some charts and cover what happened in the markets over the last couple weeks. First off, we want to take a look at the S&P futures trading here on the Tuesday close of June 20, or excuse me, the Monday close of June 26th. June 28th. We are trading right now at 1072.75. And are about where we were 3 weeks ago. However, we did rally up to the 1130 area and sold off now another 60 points or 6%. So we really haven't gone too far here in the month of June. Matter of fact, we are still sitting here slightly down for the month. The next chart I want to look up here real quick is the chart of British Petroleum BP. Just to give a quick look, again, this has fallen from a high earlier in the year of around $60 a share all the way down to 27, continues to make new lows. You can see on the right-hand chart, this is a 4-hour chart going back basically 3 months. This has been nothing but a slippery slide. It looks like nothing is going to stop this thing from continuing to grind towards bankruptcy. Next chart we want to show real quick is gold. Gold made another new high just on Sunday night at $12.66 per ounce. Traded down though, however, today $12.41. So key area right here maintains that $12.50 range per ounce. And with that, I want to show real quickly the interest rates, because gold going up, although interest rates hit another new low here for the year. We made a new 10-year interest rate low on the interest rates today. Of the 10-year interest rates are trading down as low as 3%, just over 3%. Now, the last time they fell this hard from 4 to 3% was right around the October 08 time frame when Lehman Brothers started falling apart. Right before that fell apart. So this could be telling us that there's some serious leverage signs in this market continuing forward, whether it's in Europe or otherwise. The final chart I want to show real quickly is again very powerful, dramatic. The lumber chart here traded as high as 337 just 2 months ago, 337 per board foot, and reached down to 180, which is almost again a 1-year low. So the pricing on the commodity of lumber itself is showing us that housing is definitely not seeing a recovery. All that we saw earlier was based on the government intervening and allowing first-time home buyers that $8,000 credit. So the housing market is not turning around, as lumber is always telling us before the prices of the home market does itself. That's it. We'll be back here on the Trading Desk after a quick break.